Well, hello there, Maverick Currency traders. I hope everyone has had a happy holiday and we're looking forward to the new year. And over the last 2 weeks, we've been saying, okay, look, holiday trading, it's a little bit more boring, but just wait until the first of the year. It always gets better. And look at that date. Here it is, 2024. We are ready for another great year at Maverick Currencies. So let's jump into it. In this session, we're going to be going over what happened this week. We'll take a look at all of the markets, and then we're going to really take a look at where are we right now in the market cycles. We're going to go through all the currencies, rank them from +3 to -3, and then we always look to pair the strongest against the weakest, and those are going to be our trades for the week.
Disclaimer. This video was created for professional Forex and crypto traders. Maverick Currencies is a proprietary trading firm that employs professional traders around the world. Our traders trade firm capital and keep 70 to 80% of profits they generate. All trades and analysis in this video are for professional traders only. If you are interested in becoming a professional Forex and currency trader for Maverick, click the apply button in the video description. Let's get ready for next week.
So the equity market has been bullish and has stayed bullish. And I know, Ankit, you have been very bullish on equities. Did the market action over the last 2 weeks surprise you at all?
Absolutely not. I would say that the market has done exactly how I had thought it would do. No, market sentiment remains positive. Everything is hunky-dory. Nobody's looking to sell. And whatever theme it was, it just continued. Dollar could remain weak. The yields continue to fall. So really no change in the last 2 weeks.
And the big story has been the cryptos. The cryptos have become really good on the bullish side. And I was just talking to someone the other day, I mostly trade and focus on Forex, but like 3 or 4 times a year, it's like the cryptos just become the best trade and I can't ignore it anymore. And that's where capital goes. We do not need to talk about what happened in the economic news last week because look at that, blank slate. So let's jump in to see what happened this week and especially counting on the numbers. If we take a look at equities, you can see equities were basically flat, slightly up for the week. The world index, the VT, up a little bit better. And as you can see, the cryptos were the big winners again. We liked Bitcoin and Ethereum last week. And look, they just continue to go higher. Oil and gold, they've just really been stuck around their current levels. Really no movement. Oil more flat, gold definitely to the upside. If we take a look at the S&P chart, if we take a look at the S&P chart, you can see that we've just had this general upward drift. Just this general upward drift really since the bottom in November. And we've said that, look, we're probably done with most of the gains here. And for the last 2 weeks, you can see we've gone higher, but it hasn't really been as dramatic as this period back here. We're now going into the first of the year, and a lot of things happen at the first of the year. Lots of rebalancing happens. People tend to sell some of the winners, buy some of the losers, allocate money from stocks to bonds. Generally speaking, the first 2 weeks of January are generally bullish to the upside. I see no reason at all to call an end to this bull market. I think maybe in the middle of January, we could get a little tired, but I think there's about to be another surge of money that comes into the market just from year-end kind of stuff. So yes, we could pull all the way back to the 20-day moving average. That would not surprise me whatsoever. But I still think you want to be bullish in equities here. If we take a look at what happened in the currency market, look, this area is exactly what I thought was going to happen this week. And this area, I've been calling for short dollar yen. I said that's the only trade I'm looking at. And again, it was a great trade this week. But what in the world happened to the Swiss franc? I have no explanation for this. Ankit, do you have any?
Absolutely not. I kind of pointed it out last week because, the Swiss franc is doing its own thing. It's not running on that risk on or risk off sentiment. Usually it's considered a safe haven currency. So you can clearly see how it's deviating from all the other European currencies. So really, that leaves a lot of traders kind of scratching their heads.
And it definitely has left me scratching my head as well. Look, whenever something's doing this, you don't need to know why. I remember as a younger trader, I used to yell. I literally would yell at my computer screen, why? And you know what? It never answered me back. And I realized Oh, I don't need to know why. I just need to know that it's happening. And don't fight it. So look, it's clear that the Swiss franc wants to go higher. Look, it might turn over here, but if you're going to make a trade, you got to be long Swiss franc. I just think that's where you want to be. And Olga, didn't you mention that the Euro Swiss franc is down to levels where they intervened back in like 2011?
They're actually lower than that, and I think that's what really surprises me. All that time that I've been trading, I've never seen Euro Swiss franc to this level. Back in 2011, when they intervened, it just dipped below that parity level, and right now it's sitting at 92.85. So never seen this level before.
So definitely unprecedented times going into the first of the year. Take a look at cryptos here. You can see that Bitcoin gave a little bit back. It's been hot. Bitcoin Cash out of nowhere decided to go up, and that's just what Bitcoin Cash does. It just does nothing, and then all of a sudden it takes off. Ethereum was my favorite over the last 2 weeks. It was decent. It was generally good. You can see the rest of the cryptos are now playing catch up, and it's very similar to what's happening in the stock market. All the big cap tech stocks all went up huge, and then over the last month, those stocks haven't gone up as much because the rally is broadening. People are looking to buy other things. And I think that's just what's happening here in crypto as well. Let's go in and take a look at the market scores, everything where it is right now, and then we're going to look at our currency crosses. We already took a look at the S&P. Let's take a look at bonds. And you can see bonds are generally drifting lower. We're really in kind of more of a low base, maybe, going down a little bit. More like a lowering base. Ultimately, this is still a definite bear market in the bond market. Do we go lower than 3.8, 3.9? I don't know. I think the economy is so strong. I think at some point, interest rates are going to bottom out. But this is so bullish for equities. So bullish. And you can see here, the cryptos, they came up. They hit some resistance here. They backed off. Look. It's still a decent looking chart. You still want to be a buyer. Just let it come down and we'll pick up an entry point here at some point, hopefully this week. On the calendar, we got news again. Over the last 2 weeks, we really haven't had any news, but it is the first week of the month, so we get manufacturing. So we get U.S. manufacturing on Wednesday. And then we get employment reports. We get the U.S. and Canadian employment reports on Friday. As always, we will be trading live as a firm on that jobs report. So come join us, 8:15. We're going to do a little bit of prep beforehand, and hopefully we can catch a trade and make some pips off of this U.S. or Canadian employment report. The markets will be closed. Remember, as Forex traders, you only get 2 days off. Stock traders, they got a lot of holidays off, but not us. Only Christmas and New Year. So the markets will be closed on Sunday, and they will open up Monday night, 7 p.m. Eastern Time. I'm not even going to look at the market until Tuesday morning when the U.S. session opens. Other than that, we think this market probably has a little bit more to push higher, so risk-on trends are likely to prevail. Let's go in and score everything one by one, and then we'll look at some trades. I'm going to go through our cryptos here. Here is Bitcoin. And you can see Bitcoin is just doing another big base. This is what, not just crypto does, but everything does. It has big runs and then it rests. The strongest positions have bases. The weaker ones have pullbacks. You can still buy pullbacks as long as it stays within the trend. But my preferable strategy is buying base breakouts. So at this point, look, it's just in a base. There's nothing going on right now. There's no reason like I got to get in this right here, right now. But I'm looking for potential entry points. One of the positions I like to take is I do like to take positions at the bottom end of a base. Now, I don't take a full position. I'll take like a half position or a third of position. But look, I love to get in at the bottom of the bases. So if it does come up and it does break out to the upside, you've got a fantastic cost basis on this. But look, it's not worth taking a full position at the bottom of base because, again, there's no momentum. We don't want to have just dead money sitting around, doing nothing here. So for me, Bitcoin looks great, but it's on a break. It's on a rest. Coming over to Bitcoin Cash, look, that 1 day spike, no one could have called it. As you can see, it's turned right back down. I'm not looking to be a trader in Bitcoin Cash whatsoever. Now, Ethereum is looking a little bit better. Remember, Bitcoin was at the bottom end of its base. Ethereum is near the higher end of its base. We had that little breakout on Thursday, but then it fell right back down. Again, this is where, if it goes any lower and it starts to turn around, I do like to pick up third positions, half positions for a potential breakout. Because again, a base is telling you higher prices are more likely than not. We don't know when. It's just more likely than not in the future. And let's check out Litecoin. Litecoin still isn't back up to its high. It had its run and then it just fell apart on Friday. So for me, I'm just not interested in Litecoin whatsoever. Anka, will you take us through the Forex?
Absolutely. Let's start with the US dollar. Well, you can see that this is the best trending currency that we've had for the last few months. So overall, below the 20, below the 50. So we have been staying short, and that's just the right play. Every bounce has been getting sold. So this is where we are. Nothing is changing. Velocity-wise, you can see as we are in this last day of the trading year, we're seeing a lot of back and forth, but overall, trend score remains pretty weak. So that's where we are. Now on the yen, we have a totally different story. Yen is now showing as a +2 on the trend score. As you can see, the velocity also is setting up very nicely as well. And, a lot of traders find this interesting because nothing changed from Bank of Japan. And the currency is doing well. And that's a good sign. That's just telling the money's going in. So it's like, so far, I think I really like yen across the board, both in the velocity and the trend. And the best currency out of all is the Swiss franc. I mean, take a look at that move. I mean, it almost looks like a parabolic move that's happening just the end of the year. It's very unusual the way the Swiss franc has moved. Things were kind of sideways. So but right now, I think it's sitting at a +2 and a +2 on the velocity score. But I would say something we'll have to reevaluate as we go into the beginning of January. But so far, that's where the money's going. So we don't want to fight that move. And on the contrarian side, take a look at euro. So usually euro and Swiss franc are kind of in line with each other. They deviate from time to time. But you can see that's a strong deviation where Swiss franc is at a +2 and the euro is at a -2. So as you can see, outside of the dollar, I really like the euro. It's making a nice little low base. Again, if this breaks that support, I think this can easily go into a -3. So something I'm paying attention to at the beginning of next week. But overall, the direction looks good here. And even the velocity, you can see, is at a -1. And on the same path, we are seeing the pound is doing the same thing. Below the 20, below the 50. Again, this thing is gradually moving lower with small bases where we have euro in a bit of a longer base. But they, again, provide some good opportunity as we go into next week. And again, if you think the dollar is too oversold, I think there are good areas to jump into for some of the European currencies. And right now, both the trend and the velocity looks pretty weak to me. Now, as we shift our focus to growth currencies, and this is where I think this year hasn't really followed a traditional risk-on or risk-off theme. Take a look at CAD going sideways. It deviated from the dollar, but CAD itself hasn't really gone anywhere. So just like the euro, a nice little base here. I still like it on the further downside. I know we were at 0 last week. Now we're at -1. I don't really like this much on the long side, but I think I would like it more towards the downside. Velocity is also pointing the same thing. So I think these are the areas that we want to jump on as we transition into next week. And as we take a look at the Aussie and the Swiss and the Kiwi, you can see that the Aussie did well. I mean, overall in December, starting December 12, 13, it's actually done well. And now it hasn't really done as well in the last 2 or 3 days, but it's still making a nice little high base pattern. So this can easily continue to the upside on a further break. But so the trend score, again, pay attention to the trend score. It is trending right now, so we want to be bullish as long as the trend score stays bullish. Velocity-wise, not a great to jump on. It's just in a consolidation phase. And same thing as we go into the Kiwi. Exact same thing. It's just basing right now. So these, again, are great places to jump on for a breakout. as we go next week. Is as long as the price action in the equity market stays positive, I think the money can kind of come in here. So far, they are showing that it's not moving, but it is still a high base pattern. So I still like this for the upside next week. We just have to make sure that the velocity is there when we get that breakout. So that's what's going on in the currencies.
And it's pretty much the same story we've been talking about for the last 3 weeks, where it is crystal clear what to sell. I mean, dollar has been just a clear as short as can possibly be. And that euro, boy, that euro looks really ready to break lower. I really like euro better than dollar at this point. There are so many good things out there to sell, but when you take a look at what to buy, it's just not there. You usually look at Aussie, Kiwi as your standouts in a market like this, and they're just not performing. So that leads me to say I like the yen the best on the long side. It's the weirdest thing to say. I've been trading Forex now for 15 years. And for so long, the yen was very negatively correlated with the S&P 500. If the S&P 500 went up, the yen went down. And so we always said when you're trading when you're trading the yen, you're trading equities. But all of a sudden, we have completely shattered that correlation. And really, since the Bank of Japan came out, they've really kind of broken that correlation for the last 3 years. Right now, the yen, again, when you look at all the textbooks of what should be happening, the yen should not be going up. The Swiss franc should not be going up, but they are. When they go up, when they shouldn't, that tells you very clearly, do not fight this. So for me, I'm looking at yen number one. I still like dollar short, but that euro, that low base that's been happening for the last month and a half, when that breaks, that is going to be a juicy, juicy trade. So for me, I like euro yen. Now, the big question about it is timing. When do we get the timing? And you can see the euro here is at a -1. The yen showing right now good momentum to the upside. So any trades early this week, I think you've really got to look at long Swiss franc and long yen. I know it doesn't fit the textbook of what you should do in a bullish market like this, but sometimes you got to throw the textbook away because this is what's happening right here, right now. Dollar looks like a great short. Pound looks like a great short. Euro looks like a great short. So the only question is, what do you buy against it? So for me, I don't really trust the Aussie and Kiwi yet. If they start moving, I'll trust them. But I'm trusting what's moving right now, and that is Swiss franc and yen. Do you want to be a professional trader? Maverick Currencies is the oldest US-based Forex and crypto prop trading company that will pay you for trading with our capital. Trade our capital and keep 70 to 80% of the profits. We are looking for traders just like you that are hardworking and motivated. Click the apply link on the top right of this video to see if you have what it takes. That link takes you to a 4-minute video that explains the trader position available, and you read a list of FAQs that answer pretty much all the basic questions you have at this point. After watching the video and reading the FAQs, if you're interested, fill out an application, then you'll watch the full-length recruiting video, and then schedule an interview with one of our traders. Are you our next trader? Before we jump into this, I was going to jump into another chart, but then I realized this chart that was up is very fascinating. This is a chart of Euro Swiss franc going all the way back to 1984. This right here, these little bumps right here is where the S&B intervened. They intervened and they said, we're going to push this to, this is where they intervened down here. And they pushed it back up and they said, we're going to maintain this at 120. And you can see for 3 years here, they maintained it at 120. And it was flat. This was so flat for 3 years. And then at 2015, they took the peg off, and look at that move. So this is the move I always pull out to scare new Forex traders. This was a 2,500 pip move, and it happened in about 5 minutes. It happened in about 5 minutes. It was an absolutely insane move as far as currency markets go. look and see where we are today. Let me back this out here. We're lower than that. So this was the point where the S&P said, hey, we can't have this pair be any lower because it's hurting our economy. Look at where we are today. This is a trade that I would be, again, very short term on. Because if the S&P came out, back in 2011, and that's what they did right here, this was a 1,500 pip move. And again, this happened very quickly. I think there's a little bit of danger here of the S&P coming in and doing something. So this is why I prefer yen, because I do think there's a little bit of risk of the S&P coming in and doing something to shore up their currency. Ankit, what do you think about that?
I would say that I've been in the same camp for the last year. As soon as we dip below the parity level, I'm just surprised that nothing has been said or addressed. So I think as we stay extended further and further, the probability for that increases. But I think we don't want to make a trade in the anticipation that they will do it, because you can see that there is clearly in a free fall and it is not bottoming yet. So, that's a potential risk. I think so. But I think at the same time, I'm just surprised that it's been let go so far without being addressed, because, since the entire 2023, it has been below that parity level. So it's been down that parity level for the longest time. So I think as we go into 2024, this is what is going to be potential opportunities, is where the central bank sort of changes and reverses course. And whenever that happens, I think that's where the fireworks moves will come in.
Agree. I just pulled up the Swiss franc yen chart, because whenever you have two currencies that you like both on the long or the short side, you just pair them up together and you say, okay, if I had to make a trade on this pair right here, right now, would I be long or short? Now, I would answer, I would rather be long at this exact moment. But ultimately, we're hitting a bunch of resistance right in this area. So if it wasn't for, again, the worries of the S&P coming in, I would probably be leaning towards the Swiss franc. But look, it's not a lot. There's not a lot of variation between yen and Swiss franc. So I'm going to be focusing my efforts on yen crosses. So my favorite cross is Euro Yen. Euro Yen here is a daily chart. And look, there's just a bunch of ground to give up. I think this big trend from 2023 is over. And you can see this euro is making a low base pattern right in this area. To me, I want to be short this one. Can I take a half a position now and then another half a position if it breaks below this level here? I think that is an absolutely good trade here, to do half and then add another half when we do get a breakdown. So for me, Euro Yen is my favorite cross. Dollar Yen has been my favorite cross all month long. Probably 80% of my trades were Dollar Yen trades, because that was just the best moving currency. I think it's going to switch to Euro Yen or Pound Yen. I think these are going to be the better trades over the next couple weeks. I think the dollar is still a decent trade, but I think it's run its course and it's likely going to tire out a bit. I think we're going to shift over to Pound Yen and Euro Yen. What do you want to take a look at?
I mean, at this point, I think as I look at the charts, dollar CAD looks really interesting to me. Some of the things have really broken down, and the fact is that, I mean, CAD is really weak. CAD has been not trending, but look at the dollar CAD, but it's now getting back into that 132 to 131 zone. So the question is that where we expect a bounce, or is that where we see a further break? So I think these levels are important to watch. At this point, it definitely looks extended. RSI is in the oversold level. So I think that is going to be the case with a lot of currency pairs where RSI is just so oversold. So I think these are the levels that I'm looking at going to next week, again, especially where we can see some retracements. Where if the dollar traces higher and the CAD stays weak, again, there's an opportunity there for further rally. So I just want to point out that if you have to be very selective right now in what currencies you pick. I think dollar yen, you get that. It's not in the oversold territory yet, but it looks pretty weak. So I think if yen crosses are the one, like I agree with you, those are the ones that stand out the most. But outside of that, I mean, we can take a look at Aussie dollar. Aussie dollar has, very impressively gotten back to look at that resistance level that we're getting at about 69. We tested that level twice last year before we were tracing here. So again, those are the levels that I'm paying attention to for a break and for a further continuation. If it doesn't break, I think then that's where we can sort of bounce back and forth between the upper band and the lower band. So those are the ones that I'm paying attention to. But I'm going kind of next week with a bit of a blank slate, see what happens, see where things goes, and be a little bit flexible because a lot of times we can have those couple of days of pullbacks or bear rallies. So that's expected. But I think those will provide better opportunities to get long or short based on that. Back to you.
We're looking forward to a good trading week. So over the last 2 weeks, we've told our traders, hey, let's dial it back. Let's make less trades, not more trades. We're going to be telling you the opposite this week. Hey, let's look to be more active. This is likely going to be a really good trading week. Let's be out there. Let's be smart. Let's manage our capital well. But this is a good opportunity this week to start the year off on a good note. Thank you so much, everyone. Happy New Year. And thanks for a great 2023. Goodbye, everyone.